What if I told you that one of the most controversial companies in real estate just dropped massive news that could completely change the way investors see its future? Yes, I'm talking about Opendoor Technologies, ticker symbol OPEN. This stock has been through wild ups and downs. Some even called it a failed experiment in digital real estate. But now, fresh developments are making analysts, hedge funds, and retail investors pay close attention again. The question is, does this news signal a true turnaround for Opendoor stock, or is it just another short-lived bounce? Stay tuned, because in this video, we'll break it all down step by step, from the company's latest announcements to Wall Street's reaction to what it really means for you as an investor. Welcome back to the channel. Today we're diving deep into the massive updates surrounding Opendoor's stock analysis. If you've been following the real estate market, you know how disruptive Opendoor has been with its iBuyer model, buying homes directly from sellers, then reselling them for a profit. It sounded revolutionary, but in practice, the business has faced serious challenges, from housing market volatility to rising interest rates. But with this latest news, Opendoor might be signaling a potential shift. We're going to explore what's happening, why it matters, and most importantly, whether now could be an opportunity for investors or a trap to avoid. The big development is that Opendoor recently announced a strategic partnership expansion that allows the company to integrate its home selling platform with major listing services and real estate partners. This move could significantly boost transaction volume by putting Opendoor in front of millions of potential buyers and sellers. In addition, the company has been reporting better than expected quarterly results. For years, one of the main criticisms was that Opendoor was burning through cash with little path to profitability. But now, management has highlighted improvements in cost efficiency, tighter inventory control, and more disciplined pricing strategies. That's a huge shift from their earlier growth at all costs mentality. Investors are noticing. Just recently, Open stock spiked on higher than average trading volume, a sign that both retail and institutional investors are beginning to reconsider its potential. So why is this so important? Well, Opendoor's entire business model depends on scale and efficiency. If they can buy and sell homes faster while keeping margins steady, they start to look more like a tech-enabled real estate powerhouse rather than just another risky startup. Another reason this news matters is timing. The U.S. housing market has been stabilizing after months of uncertainty. Mortgage rates are no longer climbing at the same aggressive pace, and housing demand is showing signs of recovery. For Opendoor, this means the environment could be shifting back in their favor, just as they roll out these strategic updates. Interestingly, some analysts have already started to upgrade their outlook on Opendoor, while a few still remain skeptical, citing risks like housing downturns or operational inefficiencies. Others argue that the stock is undervalued relative to its potential. A few hedge funds have quietly increased their stakes in Open stock, betting on a rebound if the company continues delivering on cost-cutting and transaction growth. This is worth noting because institutional investors often move before the retail crowd catches on. Still, the market is divided. Bulls believe Opendoor could scale like an Amazon of real estate, while bears see it as a business still too dependent on unpredictable housing cycles. Now, let's be clear, Opendoor is far from a risk-free investment. Rising interest rates could still dampen housing demand, and if inventory builds up, the company could face major write-downs. Another concern is competition. Other platforms and traditional real estate companies are not sitting idle. They're also adopting tech-driven models to stay competitive. The company's profitability still has a long way to go. A few good quarters don't guarantee long-term success, especially in an industry as cyclical as housing. So if you're considering Open stock, make sure you're factoring in both the potential rewards and the risks. Looking forward, the massive news surrounding Opendoor signals that management is serious about adapting and scaling smarter. If partnerships keep expanding and the housing market continues to stabilize, Open stock could surprise skeptics with stronger performance. Some projections suggest that if transaction volumes grow at even a moderate pace, the company could move closer to consistent profitability over the next 2 years. Of course, execution is everything. Investors will need to watch how well Opendoor balances growth with financial discipline. So here's the big takeaway. The massive news around Opendoor stock is a reminder that disruptive companies often face rocky paths, but sometimes those very challenges lead to big comebacks. Whether you see Open stock as a speculative bet or a long-term opportunity, what's clear is that Opendoor is not done yet. If you found this breakdown helpful, make sure to like this video so more investors can see it, and don't forget to subscribe to the channel for more stock market insights and real estate investing analysis.